Hey everybody, Mike DeSepoli, Heritage Financial Advisory Group. Welcome to the Heritage Market Update for Tuesday, June 7th, 2022. Hope you're all having a great start to the week. Markets just closed out a good day. We saw gains across the board today in the market, even in the face of a profit warning issued earlier this morning by Target that probably speaks to the potential weakening of the consumer as inflation eats away at their pocketbook and naturally they start to tone down spending habits a little bit. So you would expect with a profit warning like that, stocks would start lower, and they did, but it was what happened throughout the course of the day that we think is an important tell of the mood change in this market, where previous, 3, 4, 5, 6 months, good news was bad news was bad, everything was perceivably bad, but we talked about the signs of a bottom would include specifically when the market started to rally on bad news. And we've had a couple anecdotal pieces of that over the last 2+ weeks. We've started to see growth stocks outperform their peers after a significant period of underperformance. So all the green shoots are showing up in the right places. But like anything else, we need continuation, we need momentum to see that there is conviction behind these moves. So let's take a look at the market. This is our 1 year view of the market. We'll bring it in a little tighter to 9 months, right? And as we had discussed, there was a lot of excitement and price action focused on basically everything in the 4,000 range on the S&P 500 and below. Now, as of now, the 3,800 line in the sand held in this range. The market spent a little time in this box trying to fight its way out and has successfully done so at this point. So step one, right, defend that line in the sand, check. Now step two is going to be to try to recapture a spot above this line, which is called a moving average. So what this does is essentially smooths out a lot of the market volatility gyrations that you see here and gives us an idea of where a more normalized, smooth market pattern may be. And in this case, markets tend to react around their moving averages. So if we zoom out a little bit and we look over the last year, right, markets tend to, really this is actually the last 2 years, markets tend to respect, right, their moving averages when they're above the moving average. The moving average can act as a support level where if markets come down, there's usually some buying interest and markets will bounce off of it. Now, sometimes we can go below moving averages like we did, let's zoom that in a little bit, like we did in the fall of last year. As long as we get back above it rather quickly, trends can resume. However, when we have a break of moving averages, like we've seen here in the earlier part of this year, it's important for the market to try to reclaim its footing above it. And when it doesn't, this line turns from support into resistance, right? So that's what you've seen over the last couple months. We broke through the moving average. We made one attempt to get back to it and above it, failed. We made a second attempt to get back above it, failed. Markets saw more pressure. Then we made a third attempt to get back above it. That was a rally at the end of March into early April. And markets did reclaim their 50-day moving average. However, they were unable to stay there. The momentum stalled out and markets fell back below that moving average. So over time, the average and price moved together like a magnet. So naturally, the moving average is coming down. The market is coming up, and we likely have a date with this moving average somewhere in the, let's call it 4,200, 4,250 range on the S&P 500. So from here to there, we still think we have some room to move higher without a lot of overhead resistance. And then it's going to be a very important point to watch. What does the market do when it converges with this moving average? If we can reclaim it and show some momentum through it, it would suggest maybe the market has indeed bottomed and is starting to build a base. But unless or until that happens, right, all we can do is look at what we have in front of us and say, yes, the market activity has improved. Yes, stocks are starting to act better. Yes, markets are starting to rally on bad news, which would suggest maybe a lot of the bad news is priced in. But later this week, on Friday, we will get the updated consumer price index, which is all anybody cares about right now because that is the Fed's main gauge for inflation. We believe that inflation is going to start to inflect down based on some of the leading indicators that we study. So we'll be watching that number very closely on Friday to see, can we get it out of that 8% range, get it into the sevens, sub 8, start moving down. So that will definitely be a market mover on Friday. Markets are really just kind of coiling here in anticipation of that data print because it's going to be very important. It's going to determine the direction of the market. What we would want to see, obviously, is a CPI print that is lower than previous months, showing that this thing is starting to curve and inflect downward. What we would not want to see is a new all-time high on the CPI reading, right? That would suggest that inflation is not only persistent, but it's getting worse, and that would be something that would cause the Fed to be more aggressive and therefore kind of muster up all the fears that the market has had over the last couple months about aggressive Fed policy. So we still believe in our base case that the Fed and the market has priced in a very aggressive Fed, 10 interest rate hikes. We've already had 2. We don't think we're going to get to 10. We think we'll get to 4, 5, maybe 6 at the most. The economy is softening just enough that the Fed will pivot away from this policy because it won't need to tighten anymore, right? If the consumer gets softer, inflation will naturally come down. That's just the way business cycles work. So let's take a look at our heat map today. Let me just move over here so we can see. Okay, good rally. What you would want to see, pretty well diversified across the board, gains pretty well spread out. Amazon taking a breather today after a big update yesterday. They went through with their 20-to-1 stock split. So if you look up Amazon and you happen to be an Amazon holder, don't panic when you see the share price at 123 and you're used to seeing it up in the 3,000 range. They went through a split yesterday, so there's a price and share adjustment for shareholders. We talked about Target. Target down this morning over 7%. Finished the day only down about 2.3%. So again, that theme of rallying on bad news, they cut their forecast and people stepped in and bought the stock. And naturally that spills over into Walmart and Costco to a lesser degree. But overall, good market activity. Let's take a look at the individual retail investor to get a gauge on investor sentiment. Here's our fear and greed index. Still showing fear, reading of 31, right? And recap, this goes from 0 to 100, 0 being extreme fear, 100 being extreme greed. So we like to see when people are fearful or extremely fearful of the market because it would suggest that all the buyers are not in the pool, right? Because for a market to go higher, we need more buyers. And if we see that there's a lot of fear, that would suggest that people are pulling back, they're scared, they might have money on the sidelines, which will eventually be gunpowder for the rally that comes later on. So markets have moved up about 8 to 10% off the lows, but yet investors are still terrified of this market. A very good setup. So all in all, looking out later this week, right? Friday, we talked about that consumer price index report. Comes out at 8:30 a.m. Keep an eye on it. It's sure to be a market mover. We want to see something in the 7+% range or below. Anything over 8.3 would considerably be a problem and a headwind for the market. So if you have any questions, reach out to us. Always happy to talk to you about anything that matters with your money. Have a great day, and we'll see you back later this week for the Heritage Market Pulse.